Hi there. Thanks for tuning in. Today, we're going to be taking a look at GigaCloud Technology, ticker symbol GCT, in the New York Stock Exchange. But before I get started, if you enjoy videos like these, don't forget to like, subscribe, and if you want to comment if there's any stock you want me to analyze, or if you have any further inputs. I love replying to my commenters and I love looking at the stocks that they tell me to look at. So, without further ado, let's just get started. So, GigaCloud Technology, it's not a cloud company, actually. It's a global B2B marketplace supplier. So, they basically help with large parcels. And if I am a company that wants to get a bunch of furniture, a bunch of gym equipment, things like these that are a little trickier, they have the services that would connect me with my needs. So, they do serve supplier fulfilled retailing, SFR, where they get from the suppliers and manufacturers. This goes to their website, it goes to the buyers, and it goes to the end customer. So they're part of that fulfillment network here, where it's all fulfilled through GigaCloud, and they get that stuff from the sellers and help them find what the customer needs. And this is all for these larger things such as furniture, gym equipment, etc., which is a little more logistically complicated than your usual kinds of parcels that are a lot smaller, a lot easier to do in bulk, a lot more standardized. So here you see sort of the pipeline here where the seller lists the products, the buyer discovers the products, the buyer lists on 2C channels, the end customer places the order, and GigaCloud fulfills directly. So it ships from 36 global fulfillment centers directly to the end consumer. So they help with that fulfillment, even though the buyer and the seller are interacting here and there. So they manage 50,000 SKUs and they're growing, some of that in gardening, auto parts, toys, appliances, bath, fitness, indoors. So basically, things that are just more logistically complicated and not that standardized, as we were saying. Their presence here talks about North American fulfillment. They'll deliver to Japan, to Germany, to UK, to the US. They have all this reach here, but they source from multiple places. They source from China, they source from India, Vietnam, Malaysia. That's good to know because in a world where trade right now is maybe a little bit neutered by policy, they can still source from places where things like tariff rates are a little more favorable to them and go from there. So it's good to know they have some diversification both in the reach that they can do. So Canada, Japan, Germany, UK, in case the US isn't doing too hot, and vice versa. They have a lot of exposure to the US market, of course, the biggest economy in the world, and they can source from different places to deliver there. So always a good thing, of course. Now, at a glance, their revenues, they have been growing quite a bit. The first quarter of 2025 wasn't great, but overall, their year-over-year growth for now, it's 4%, and they have grown stratospherically beforehand. Their gross profit margin also growing to staying pretty steady as well. Their net income margin somewhat steady as well, and the EBITDA margin. So far, it looks pretty decent. So far, they have growth of more sellers that go through the website, more buyers that go through their tools. So generally, it's a picture of growth. It's a picture of slowing growth now because it used to be things like double digits in growth. Not so much anymore, and we're about to see that. So if you look at the information we have since they became public, you'll see this stratospheric growth here with double digits, double digits, double digits, double digits. Now it's a little more muted. It's closer to that 4% that we'll probably see for fiscal year 25. So important to note that as trade sort of shuts down a little bit and as they are maybe experiencing that natural slow in percentage growth, what's going to matter now is just can the margins improve, which it seems like they are, and you see them improving here even over the years. Can they keep reinvesting well? This return on invested capital, can it also grow? And from there on, where do you go? How do you generate free cash flow? And can you put yourself in a good position even when it's complicated with the global trade panorama? And if it sends the stock even further down and they're in a pretty good position, if the margins are solid and whatnot, could this present a buying opportunity for us? And perhaps it can. So I'm going to do a little discounted cash flow model here based on sort of these very tempered assumptions saying, free cash flow is actually going to go down next year relative to the year before. And then I'm going to grow it super mildly, basically a 1% from 2025 to 2026, and then 3% from 2027 to perpetuity. My required rate of return here is 11%. That's 1% more per year than the market historically returns. And plugging those numbers from the discounted cash flow model in with these percentages, I would get a value of $1.45 billion. That's their market cap. If we divide that by the total number of shares out, then we would get a fair value of equity of $38.66 per share. If we subtract the net debt, of which they have a little bit, not much, it would be $34.27 per share, with my assumptions once again being 11% required rate of return and a 3% perpetual growth rate. Let's look at where the stock is now. So interesting. Here, it's actually somewhat lower than what I'm looking at. We're talking about a 25%, maybe a bit more than that, lower than my prediction. And it's been at those values before. If you'll see here, this is probably 32.5, which is pretty close to this 34.27. So it does reach those values before. It actually took quite the tumble in early 2025. This would have been a great buying point. But from what my model says, you may have not missed the train entirely. Obviously, you're not going to double your money here, but it seems like a decent opportunity here. The P ratio being something if you look backwards, it's pretty low. It's an 8. If you look forwards, it's probably going to be a little higher, probably 10, but still pretty cheap. And the market cap, once again, it's 1.03. So yeah, I think a 40% undervaluation here, 30% undervaluation here relative to the post-debt number. So that's always good. So will the rally continue? I mean, it looks very interesting because there could always be further gains to be made with this business. The rally may not be done, or at least in the very long term. It will depend on a few things, however, such as where tariff winds blow. If there's some volatility in the markets with that, this may negatively affect them in terms of the share price rather than the business. So, that may present a better value opportunity if you're willing to wait it out and if you really have confidence in tariff winds going in a weird direction that increases volatility. However, the rather low earnings growth still provides an undervalued forecast, and I like that. I'm forecasting 1% into 3% in perpetuity. That's very low. If they can beat that, they're worth more than that. And that's paired with a recent share buyback surge. So if they can keep that up and they can buy back shares when the stock is low rather than when it's high, they can keep unlocking value for the shareholder. So, will it always be delivering value? This is something that you can ask for any business you're buying. Where is it delivering value just right now because it's cheap? Is it always delivering value no matter when the economy turns sour? Will they keep buying back shares? Did they buy back shares when it was high and they'll stop buying shares when it's low? Doing something that seems irrational, but oftentimes goes in line with investor exuberance. Will this stock always be delivering value no matter how much it's run up or no matter where the trade winds are going? That's something to analyze and something that helps you determine your risk appetite. But GigaCloud Technologies looks very interesting to me. Now, I hope this analysis was helpful. If you like videos like these, don't forget to like, subscribe, and comment once again. Thank you so much for watching, and have a great rest of your day.